You are being robbed. Let me explain how. Most people think renting is just throwing money away. Every month, part of your paycheck is immediately discarded for rent, and that's just for you to have a place to live. Buying a home, however, feels different. Not only are you paying for shelter, but you are also paying for something that you partially own. So technically, you can say that you are starting to invest in real estate. Thus, it seems like buying a home is the correct choice because when you rent, payment disappears, but when you own, you are paying for shelter and owning equity in that home. However, this comparison is not exactly complete because the deal with owning a home is not as simple as that. Because when you rent, some of the challenges of dealing with your property are hidden from you. When you own, you will have to deal with these challenges, such as paying interest on your mortgage and other potential maintenance fees. You don't see these challenges now, but they will quickly become a real problem when you start owning a home. The real question is owning a home actually better for you financially? Let's take a look at that. Now let's talk about the opportunity cost behind buying a home. Compared to some other investments like stocks, crypto, and precious metals, real estate is heavily illiquid, meaning that if you need your cash today from selling your home, that's going to be really difficult. Let's take a look at the data with pure asset returns for a 10 to 30 year period. Assume you have 100K in two scenarios. With one scenario investing that entire 100K on one property and average inflation adjusted property returns in the US being 0 to 1%, after 10 years, you would have about 110K, after 20 years, 122K, and after 30 years, about 135K. While with stocks, on the other hand, with about 6 to 7% inflation adjusted returns, according to Investopedia, you can expect in 10 years 197K, 20 years 387K, and 30 years 760K. This clearly depicts that just by investing in the stock market, your returns are most likely going to outperform your investment in your property. But the nightmare doesn't end there. Let's talk about the scam behind mortgages. Dave Ramsey has long argued that debt is generally bad because it reduces financial flexibility while also increasing risk. I generally agree with this take. Think about how massive and wealthy the big banks are. They're able to accumulate this wealth by loaning to people like you and me. And the returns seems to be outperforming any investment class because we are using leverage, and most times we don't consider the risks of leverage in our mathematical computations of returns. According to Origin Investments, debt financing can enhance returns when projects are going according to plan, but it also works in reverse. Let's take another scenario. The median home price is about $450,000 in the US, while the average salary is about $63,000, meaning that your take home is about $45,000 after taxes, and the average rent in the US is about $1,700 a month. So if you buy real estate for a 20-year mortgage and 20% down with a 6% interest rate, this means that you have to pay $2,500 a month on your mortgage. And assuming a 1% inflation adjusted returns on your home, the value of your entire investment on your home would come out to be about $550,000 after 20 years. So what would happen if you just invested in index funds? Instead of putting the $90,000 on your down payment, you put it as your initial contribution, taking money out on your rent, putting the leftover $800 a month from what you would use to pay for your mortgage into index funds, your returns would be about $750,000 after 20 years. That means there will be almost a $200,000 difference between you putting your money in index funds and just renting over buying a home. And these are just the returns from investing, not even accounting for the risk that comes from using borrowed money. Now let's talk about all the fees that come with homeownership that no one is talking about. The first big one is property tax. Every year, just because you own that property, you have to pay property tax on that property, which can range from 0.5 to 2.5% of the value of your home. This means, assuming the average home price in America to be $450,000, you will pay around $10,000 every year just to own the home. Aside from property tax, there are also a lot of other purchases that you must have when it comes to owning a home, like maintenance fees for anything that breaks. Usually that responsibility is on the landlord, but if you own the property, that responsibility is on you. According to Zillow, homeowners on average spend around $10,000 per year maintaining their home. These include fixes on plumbing, HVAC, or other renovations. Also, to protect your home, usually you also have to pay insurance, which can again run you about $2,000 per year, according to NerdWallet. Putting this all together means that it will cost you around $22,000 just to own the home. Another hidden expense is just the act of buying and selling a home means that you will need to involve a real estate agent, for which they can take around 5 to 6% on commissions. Meaning on a $450,000 home, $27,000 every time you plan to buy and sell that home. What should your takeaway from all of this be? It's not as cheap as you think for just owning that home. Even real estate gurus such as Grant Stephan has liquidated all of their properties in LA as of recent, and he will discuss the hassle behind even buying real estate as investment property, which could be a pain point on its own with the uncertainty behind policies affecting rental income in big cities such as LA. And just having a few bad tenants can make your life really miserable. So what are some counter arguments for buying a home? It is true that rent continues to go up, but so does ownership costs. And Americans are already having a hard time covering rent, so if there's enough people with this problem, policymakers can be voted in to address the rent issue, which makes owning a home more risky. Therefore, people like Mandani gets voted into office to help address such issues. Another argument is that houses will continue to rise in price. This is true, but so will other asset classes such as precious metals and stocks. In this case, we should look at which asset class produces the most return. Really think about it. Next time when you make that big purchase, I am not advising against the purchase of a home if you have the financial means to do so, but if you are looking to make more money from over leveraging in real estate, I'll reconsider that decision. Owning a home isn't automatically a bad decision, but it's not automatically a great investment either. It's shelter with debt, taxes, and long-term commitment attached. If you're buying for stability, that can make sense. But if you're buying because you think it's the smartest way to build wealth, pause, run the numbers, then decide.